Good afternoon, ladies and gentlemen. Eric here with you on this rainy Thursday, February the 22nd. I had a video I put up there earlier, but I guess it did not quite make it all the way to Facebook, so I did just go ahead and get it posted there. It was a midday update, but this is just going to pretty much be a continuation and a recap of today's action, so my apologies for that. Mistakes do happen sometimes, especially when you're dealing with this book of faces and whatnot, so my apologies, but we'll go ahead and get going. And like I say, I don't think there was anything in that video that we didn't already know, such as we should be selling. So let's just go ahead and pick up right there, because that's exactly what we need to be doing. This is a daily chart here, of course, of the S&P 500. It's where we always start at. So we just want to take a look here. Wanted to mention a few things, so I went ahead and added a few other levels on here, and we talked about these a little bit during the midday update. The reason I wanted to do this is just kind of show you some of the zones that are starting to come into play here, and so how much we had failed here pretty much. And so if you all recall, we did talk a little bit before about using this 382 and the 618 retracements, and then we also said that we should be watching this 50% because it had it was coincidental with this other Fibonacci retracement from a previous swing. So I have now added on this other swing here to represent the rally that we've had off that 200-day moving average that we bought on. And so based on this high, and this is the only high that we know of right now, it's occurred pretty much 3 days ago on Monday. That's the peak for right now that we know. So that was actually pretty much exactly where we planned on going, because we expected this decline, and then a rally back into the 618 retracement, and then the decline from there. And so we're on track to be doing that now. So this is the third day that the markets have closed lower. Actually, it closed fractionally higher, it looks like, than the previous day, but I'm assuming it was pretty much only by a handful of points, 2.63 points, so a tenth of a percent is what the S&P was able to muster out today. Like I said, I just think you just got to be selling into this thing. I don't see any reason to be buying at this point. You know, we're pretty much at record highs. I mean, this is the highest right here that the S&P has ever been in its history. So, you know, given the rally that we had going into this, I could say there's just not much in terms of a cohesive, coherent argument for the bulls to justify the markets going higher, because in order for us to go higher, we start getting into multiple expansion, which means we're willing to pay more for the same amount of earnings, and that's just not something I think investors are willing to do at this moment, just because there's a lot of uncertainty out there, even with some of the things out there like the tax reform and healthcare stuff like that. Even with all that stuff in mind, there's still a lot of uncertainty, especially things like geopolitical risk, and now we have all this stuff with North Korea and Iran and all these other people. So like I say, there's just too many unknowns at this moment to be buying into a market that's already valued at pretty much a premium to its historical average by any stretch of the imagination. So let's get back over here to the markets real quick. So like I said, we'd been looking to sell into this, and we'd kind of talked about using a zone to sell into, and that zone pretty much was pretty much right in here with this 50% retracement and 618 retracement. So you know, I don't know how much better I can give it to you than that right there. I mean, we talked about buying against that 200-day moving average. I told y'all to buy this dip right here that day. That was at 25.39 was where that moving average was at the time. And I said I expect a rally back into that 618. And I also said that because of all these resistance levels overhead, such as these retracements and this 50-day moving average right here with this yellow line, that we may not quite make it all the way to the top side of this 618, and so that we should just be considering this as a zone to sell into. So if you have heeded my advice and you sold into this zone, you're looking pretty good right now. And you know, even if the markets were to say they were tomorrow decide they wanted to jump higher, and the next week we bounce up a little bit higher, I just don't think that the risk return or the risk reward ratio is skewed in our favor. So I think you got to jump out of here. I can't stress that enough, especially from a longer term perspective, and we haven't visited the weekly chart in quite some time, so we'll pull it up here real quick. Now this is a 10-year, and I'll make sure that we're looking at 10 years worth here. There we go, 10 years of data. So, you know, as you can see, even if we just put this little small trend line on here, and just for a rough estimate and kind of see where that leads us to, it's been a trend line that's held for, well, 10 years now. So I think that you got to kind of respect it until it's proven that it can't hold anymore. And I'm trying to make this a little bit bigger here for you. Um, so if we're going to check this trend line, then that takes us all the way down to 2200 basically. So that's a lot further than what I think we might go, but it's very well possible. So like I say, the risk reward is just too far out of balance for us to be buying and being bulls at this time. So like I say, take your profits if you got a good gain in a name that's something that's a kind of a mega cap or large cap stock, such as Boeing's, or I don't know, some of these other names that are big factors, Apples and Exxons and some of that kind of stuff. And I think you can find some certain names if you do a little stock picking, and we've been trying to do a little bit of that, and I've been trying to give you all a couple of good names. Procter & Gamble kind of stands out to me. Walmart we took a jump into just as a technical play. So there's a couple things out there that I think you can buy, but as far as buying broadly or buying index funds that track the S&P or the Russell or the Dow or the Nasdaq, I think it's just pretty much suicidal and asking for a loss at this point. So this weekly chart here, and I'll just zoom in a little bit just so you can kind of see what's going on. We are it's looking right now, it's like a minor pullback, but it's kind of exaggerated. So I think that, like I say, just the way that the tape is acting, it looks like this thing's about to roll over. Now, one thing I wanted to point out on this chart is that if we do get this moving average crossover here, which it's happened before, and you can see it over here, but it ended up being a false breakout or a false indicator. If that's the case, then this thing could really get ugly really quick, and if it does get ugly, that's when this 2200 becomes a very real possibility. So I would definitely be watching out for last week's low. And like I say, if this 2500 starts coming into play, and remember we had a 2491 area that we've been talking about a little bit, and I also see just here looking just right off the top of my head, I can see it sitting there in this this area right here. So that's at 2100. So as it shows right here, it was resistance for a good part of for better part of a year there. That's 2015 right there. And then once we finally got above it, we checked and tested it, and then we were able to rally back. That was pretty much around the election that occurred. So I think that that's very much a real possibility that we return to that breakout level down there at 2100, which would coincide with some of these other things that we see, like the trend line, and we had this 200-week moving average coming up through here. I'm pretty sure we'll take the 50-week out without thinking twice about it. So like I say, there's just becoming a huge amount of air underneath us here, and if you're holding on or you're buying at this point, you're late to the party in my opinion, and you're going to end up getting burnt. So I would be very careful about buying anything, broadly speaking. Now if we can just even get a retracement, or get down to say a 618 retracement of this move right here, and I'll put that work together for a little bit later on, but just roughly it's going to be right in that 2400 2350 area. We might be able to catch a bid then and then continue rallying higher, but until the tape shows us that's what's going on, we gotta stay bare right now. So I hope y'all are selling. I hope y'all have been paying attention here, and you're not trying to jump in front of a steamroller right now. If you take a look here, this is a 5-day 5-minute chart here. We had this, and I talked about this a little bit yesterday on the video. This little spike right here that you see where it jumped up, that was a result of the Federal Reserve's meeting notes coming out, and the markets initially popped higher, and then they rolled over. But once they started to tank, they just got all kinds of momentum, and they just kept declining throughout the day, and we actually ended up closing down here at the lows of the day. Now, this morning it kind of seemed like that we had maybe turned a corner here, and that we were going to kind of start putting in a little short-term bottom. We had our moving averages cross over. This is of course a 5-day 5-minute chart again, so it's very fluid and can be very volatile. And we actually came back up, but as I mentioned I pulled up here on SPY, the ETF that we use, this decline, and that's kind of how I viewed this, and so I'll just kind of show you real quickly. This decline right here, we pretty much measured that one and put our Fibonacci retracements, and the 618 level came in play right here at 2730. So we kind of knew that was where we were going to end at, and I'll show you here just by pulling up SPY. That's kind of what happened. So, as I said there, we dove, and then this morning when we started rallying back, we failed right at that 618 retracement. So this Fibonacci and technical stuff works, guys. I don't know if y'all are just, there's no guarantees in the stock market or in life for that matter, but you have to use all the tools that you can to your advantage. And like I say, this is one of those that it works very well. So you see this decline, you retrace back into the 618, and you start declining again. Now the fact that we end up taking out the low of this decline here today, and we did that pretty much at the close, I'm pretty sure tomorrow it's going to be pretty brutal. So that's just kind of a heads up that Friday will probably be pretty nasty, and that also means that I think next week will be pretty nasty too. So tomorrow might be one of your last chances to get a good price for whatever you need to sell. But if not, then next week you may end up wishing you had to have paid attention and had to listen in the past. So I just wanted to cover the S&P real quick, and I'm going to get together a video here with some other individual trades. But this is such a major call here that I'm making, and like I say, I can't stress enough that I think you had best be selling if you want to protect your capital on the line. 401ks, IRAs, long-term portfolios, they should be okay. Now, if you want to be a little bit more aggressive, then you could start rolling into, say, some even cash funds would be fine at this point. I mean, you'd rather have a little bit of a bond exposure in there to get a little bit extra yield, but bonds are not exactly a safe haven at this point. So taking a look here at like something like TLT, which is a 30-year bond fund, it's not been very pretty either, and especially from a daily perspective, it is getting crushed. So I think cash is king, and that's where you need to be at. Alright guys, I'll get together a video with some individual trade updates and stuff, and we'll take a look at it and get you some ideas for tomorrow to establish the position going into next week. And so I'll be back with y'all here in just a little bit. Alright, take care. See ya.